Good morning, traders. It's Monday, the 19th of October, 2015. It's 7:18 a.m. Chicago time. This is a pre-recorded Trader Bite. There, the sound should be a lot better. Again, this is it's 7:19 a.m. Chicago time on the 19th of October, 2015. This is a pre-recorded Trader Bite. I have to take the kids to school this morning and couldn't do it on time. So, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the overnight news. Not too much to report. The big news last night was the China data. China announced its retail sales number came in at 10.9 versus 10.8. Also, GDP, which was the big one, quarter on quarter came in at 1.8 in line, and year on year came in at 6.9, which is a 6-year low, but the expectation was 6.8. We got a quick drop off of that. I was here for that release at 9 o'clock Central, and then the market rallied a little bit after trading sideways. Pretty much a non-event. China's September industrial production came in at 5.7 versus 6, a 6-month low. Since then, ECB's Nowotny has said that there may be a need for Eurozone fiscal policy to become expansive from neutral, therefore giving the market a quick pop at 2:15 in the morning. And you can see a reaction in the European markets there. But the market has since settled down, has sold off, and hasn't done very much. Morgan Stanley reported 48 cents versus 64 cents, a big miss there. 7.77 billion versus 8.64 billion expected. Looking ahead at today, we don't have very much. We have a 9 o'clock number in the U.S. NAHB Housing Market Index expected at 62. And then we have Fed Speaker Brainard at 9 o'clock Central as well on cutting regulatory red tape. At 10 o'clock, we're looking for Speaker Nowotny. At 11 o'clock Central, we're looking for Fed Speaker Lacker. And at 2:05 p.m. Central, Eastern is plus 1 hour, BOE Speaker Alex Brazier. After market, we're looking for IBM releases. IBM is, I believe it's still the heaviest component of the Dow, so you need to look out for that. Let's switch gears now to the technical picture here and what we've done. So let's look at Friday real quick. Friday was looking for this high to be broken. We left a fairly poor high on Thursday's rally. If you recall, Thursday to Thursday we've been rallying. So we left a poor high here. Expected that to be taken out. We opened just above at 2021.75. We test above, and we achieved the first goal, which was not really difficult to achieve, which was the 2016 quarter point of control. We got it by a point there early on, and then for the rest of the day it was a chop fest with a rally near the end and a really terrible looking high on the close. Part of the expectation was for it to pull back to 2007. There was a thin volume zone right below 2011 or so. We could not quite get down there. The low of the day is 2012. We had a neutral day on Friday, but overall a balanced profile. The value area is important today. Right now the market's trading on the low end. It's been pushing the lows. I actually, when I left last night, my last comment in the S5 chat room was on Twitter, is the expectation for lower lows from the China low as a continuation. That was canceled out by the European release. Here, let's look at that. That was canceled out by this the European Open, which was fairly strong, but overall it ultimately ended up achieving its lower low. The low put in after the on the China news was really, it didn't make a low, it just dropped 4 points and it came right back up. The low before then was this 2018 quarter, and we got down to 2017 and a half, and we're pushing that low now. So overall, the market's completely imbalanced despite the big news, big numbers from China overnight. Remember, these numbers really rocked us in August or so, July, August, and it was really a non-event last night. The market's totally imbalanced. Market's still making higher highs and higher lows. As you can see here, it's really it's continuing to one time frame. The point of control moving up and then moving up again, with the lows getting higher right there and the highs getting higher as well. So we are one time framing up. We have to assume that this continues until it does not. Again, the old adage, the trend is your friend. We are back inside of the sell-off day from August, so let's back up and look at that to see what we're templating. Here comes the end of August, right there. We're templating 820. The expected next target is at 2029 and a quarter, right there, and we're working our way up to it. The overnight high was 2028, as outlined right there. The expectation was if we break through this gap zone here and start pushing up, then we are likely to push into this 2029 quarter, and then the ultimate goal is to take back this 2043.75. This is an area that sellers will need to defend in order to stem the buying spree that we've had here over the last couple weeks. So what's the plan for today, since I need to keep this brief and head out the door here in 3 minutes? The plan for today is more of the same. The expectation this morning, if it opens, the open is an hour from now, so it's hard to tell, but my primary expectation for this morning is that we do open in range, in value. I expect us to chop around, look for a test of value high, look for a test of value low, and then look for it to break this overnight low because it still looks weak. But ultimately, I expect chop and more of the same, a rally into the close as we have had over the last couple of days. So that's the primary hypothesis. If the primary hypothesis doesn't play out and Hypo 2 plays out and we start to take out 2012 and a quarter, then look for a minor support at 2010. If not, then 2007 becomes key. This is the micro composite point of control right here, 2007, and then the target below would be 2000, the 2000 mark. That takes back the entire this single prints and the entire buying range. So you could see on this chart here from last Thursday that we have an incomplete auction down here that started at 2001. We have a single at 2009.75, so that's where the 2010 comes from, and then beyond there we do have that point of control 2007, and then beneath there 2001 would be the key target for any shorts below. Once it gets there, it'll likely push through a little bit to get into this volume, and then it'll likely chop around and then get stuck in the LVN zone. That's Hypo 2. Hypo 2, given the conditions that we're in now, Hypo 2 is less likely than Hypo 1, which is to, given that it's Monday, it's likely to chop around and then as soon as it fails to make lower lows, it's likely to push up. Anyway, I'll have to leave you with that. I'll check in a little bit later on. If there are any comments, I'll put them in the, for those who are part of Stage 5 Trading, I'll put them in the chat room. If not, then you'll see them on Twitter. Good luck today, and I'll catch you tomorrow. Take care.